Welcome to our very first episode of Sharing Our Thoughts with You. I'm sure many of you have read about many news being reported in the media recently. Today we are very happy to have our Head of Investment, Mr. Xiao Kek Wee, to be with us today, sharing about what actually happens in the market. It has been turbulent times in the investment market. S&P 500 dropped 20% over 2 weeks, and oil dropped 30% in just one day. Could you share with us what actually has been going on?
This is a medical crisis leading to an economic crisis and a financial crisis. Of course, it all started with the COVID-19 virus, which I guess all of us know very well by now, at the end of January this year. So the first effect of this is demand evaporation. Because when the virus broke out, the China government quarantined the people. Hence, people are not allowed to go out. Well, I guess neither do they really want to go out. And hence, when people don't go out, they don't spend. And when they don't spend, the economy slows down. So that's the first impact. Secondly, is the supply chain disruption. Today, China accounts for 17% of the world's GDP and a third of the global manufacturing. Hence, when China stops manufacturing, the rest of the world will run out of components, raw materials to be selling. So that is the second effect. And of course, thirdly, if this prolongs, then I think that's what we are starting to see is creating stress in the financial markets, where the central government is trying to pump money into the system and loosen the monetary policies. But so far, what we've seen is it's got no impact, and people continue to be gripped by fear.
Thanks for sharing with us. At least we know exactly what has been happening. So, Kek Wee, do you think the worst is ahead of us or behind us?
I think it's ahead of us. Let's look at the factors I mentioned just now. Demand evaporation. Well, it started only with China, and now it's moving into Europe in a big way, and into US, which is currently still an unknown, because testing has been limited. So as this virus spread, the lockdown will increase, and hence the demand globally will dwindle. And secondly, supply chain disruption. For China, to ship goods to the West, it takes about 30 to 40 days. And of course, companies keep spare inventory. And hence the lockdown in January, end of January, will only be felt in the West. Sometime, I think, starting now, which is mid-March, to April. So the real impact of this supply chain disruption has in fact not been felt yet. We are likely to see it coming through in the next few weeks. And thirdly, I think the stress in the financial markets, if this continues, the stress will build up. And unlike previous crises, this crisis is caused by a virus. And hence, policies has proved so far to be futile. Because just think for yourself, if today I will give you a ticket, to go to a cruise for free, would you go, Shereen?
No, I wouldn't.
I wouldn't as well. So policies has no impact, regardless of the reduced interest rates, reduced tax. People are just not going to spend. And hence this is a first of a kind that we have seen for a long, long time.
Last but not least, I think many of our Unicorn clients and friends of Unicorn, they will be very, very curious. How is Unicorn positioning our investment portfolios for our clients now?
For quite a while, we've been pretty concerned about the high valuations of the assets market that's fueled by massive amount of debt that's been pumped into the system. As such, we've been staying conservative. Generally in our portfolio, it's about 25 to about 40% in equities. The rest into more defensive, safe haven assets like gold, bonds, and cash. And hence, we've seen from the start of this crisis, from about 2 weeks plus ago in the stock markets till today, our portfolio has been very resilient. However, we want to be really grabbing these opportunities to be buying into equities markets. However, we want to be careful rather than being rash about it. Because if this crisis only lasts for a short while, we think the eventual bounce will be very strong because of the stimulus that's been pumped into the system. And hence we need to be sufficiently invested, I think probably close to levels like what we are seeing today. However, we also need to be prepared, because if this virus prolongs, then I think something like the 2008 and 2009 crisis could be very real. And hence, if that happened, the stock market probably have another 30 to 40% more to drop. And hence, we want to be really grabbing the opportunities for our clients during this period. Because for most of our clients, this money is only needed, say, 10 years later, 15 years later. And I'm quite sure by then, the virus will blow over. So I think we all look back at this period and saying that this is a golden period for investing. And we want to make sure that that happens for all our clients. Because we are the steward of our clients, and really we want them to be well. So that's how we want to be positioning going ahead for our clients.
Thank you very much for being with us today. Stay tuned to our next episode of Sharing Our Thoughts with You.